with us this morning. Thanks also to our panelists, who I'll introduce here in just a second. But you see the title of the conversation today. It's the Ag Credit Outlook. We've got three experts with over 80 years of experience when combined in terms of working in these markets. A quick brief advertisement about what Ag Allies is. If you were to ask me in 3 words, I would say we're about connecting people, we're about convening people, and we're about getting people to collaborate together on big issues. And that's a microcosm of what we do at the Chamber generally. I like to say that I think the problems we're trying to solve today are more difficult. They take more horizontal leadership than vertical leadership. They require a lot of collaboration and conversation. And so, we're trying to do that in the ag space, just like the Chamber does that overall for the state in terms of the business environment for the state. So appreciate you being a part of that. There's no fee for being engaged in the Ag Allies calls, but we do, call on folks to please be a part of the NC Chamber team. And if you want to talk about that, I would be thrilled to have that conversation or have someone from our membership team work with you in that regard. The inspiration for this particular event comes from the fact that when you start the new year, there are all these conversations about what economically do we have to look forward to in the coming year. We just completed a big conference with the NC bankers, the Economic Forecast Forum, where the chair of the Richmond Fed was on the program and gave his thoughts and insights and outlook. The commissioner hosts an event at the fairgrounds during the farm show where he has an economist come talk about the ag outlook, the economic outlook. And so we felt like a niche in that space that there was room to still have another conversation about, was talking specifically to ag lenders about what they see. They're in a little bit different position than bankers overall, or than just economists. These people that you're going to hear from today are actually the folks who either directly themselves or they supervise the folks on their staff who sit down at the kitchen table with farmers, or crawl into the pickup truck with them, or sit on the tailgate and run the numbers. And so what are they seeing in this uncertain time, this time where we've got a rising interest rate, or maybe a leveling interest rate environment? You guys can correct me on that. I don't really know where we are. Certainly a time of continued price volatility. And if you got a really short memory, you say this is unprecedented, but I think all 3 panelists recognize there's not a lot here that's not unprecedented. And so we'll leave it up to them to make that last call. We're going to start this morning with Nelson Powell. And it's hard for me to introduce Nelson with a straight face, because not only do I respect him as a banker and as an ag lender, but I've known Nelson for many years as a friend and a fellow Sampsonian. He grew up in the southern end of Sampson County. He's been in the ag banking world for over 20 years at this point. Started his career actually with Farm Credit, at least in the banking space, has spent time with Rabo, and now is with First Bank and Trust of Virginia, which clearly has operations and does lending here in the state of North Carolina. Also a stint with USDA, a stint with Smithfield, crop consultation. He's done a lot. He's checked a lot of boxes in his career and has a lot of perspective. I would also add Nelson is on the speaking circuit. He gets out and about and is consistently, I'll follow his Twitter, which is Banker Farmer Nell. And I'll see that he's speaking at a meeting here or there. And I think has credible technical insights in terms of what's happening in the ag space. But also for all of us that know Nelson, he's not merely just a nuts and bolts, numbers and digits, get the comma in the right place kind of guy. He's also an insightful, good person, and just has a human nature that's contagious. And in fact, I think if you call Nelson on his cell phone and you get his voicemail, you're going to hear it's a great day to make it a great day, or something like that. So he's one of those people. So if you're not having a great day, you may not want to listen to Nelson, because he's gonna probably end up pepping you up. So Nelson, maybe you can start by telling us where in the heck you are, but we certainly look forward to your insights on what you're going to share this morning.
Well, thanks, Ray, and thanks for that kind introduction. I surely appreciate it. I'm coming live today from Goldsboro, North Carolina, at the North Carolina Sweet Potato Commission annual meeting. And I'm sitting in the parking lot in the seat of my pickup. So I do appreciate you bearing with me as I present today from the seat of my pickup. I need to give a quick disclaimer that everything I say today is just a representation of me and my thoughts, opinions, and pontifications. It don't represent anybody or anything or the company I work for. I need to get that out of the way. I don't even know that my wife would agree with half of what I say, but certainly not today. But I want to go through this, and there's a lot to process. And so I stole this from one of my good friends, and we're going to go through this like me through a barbed wire fence, quickly and carefully, but I'm still going to hit all the points. So stick with me. As an ag lender in this space for 20 years, we sit at a lot of kitchen tables and a lot of boardroom tables, and we just sit in front of people and listen to life. And we get to hear what's going on in their life, and it ranges based off of a lot of economic factors, personal factors, whatever business they're in. But there's more than just rates to banking. I think everybody knows that. But right now, looking at inflation and inputs and labor and materials and energy and debt levels always, on the way up here, and also interest rates combined with that, there's just a different dynamic that I'm thankful the Chamber has called us to look at today. And I will comment that I think Chad and I make up 40 years of that. And Mark Bradley rounds out the other 40 for the 80 years of experience. And Mark, you can get me back for that later. I was taught young in the farm credit system by a lot of seasoned lenders that it's not the bad years that get you. It is the decisions that you make in your operation and in your family during the good years that will determine your overall outcome. And I try to approach that every day with clients. But there's a lot of impact zones here that we'll get into. And, there's a business impact. Obviously, there's cash flow. But there's also an emotional impact. There's trained frugality. Farm families generally are trained to be frugal. And so, we see that a lot. And this is an upsetting time for them because things are just expensive. There's also people who get into business and they live high on the hog, so to speak. They're living a good life. And times like this cause for things to be curtailed, maybe even sold or dispensed of, liquidated. It's time to make different decisions sometimes in ag, and we have all different emotional impacts that go along with that. I'm choosing to focus on 3 quick areas a day, and by no means is this an exhaustive list. There's plenty of things going on in the state I know nothing about, but I just thought I'd cover the 3 areas that I see. So if we could hit slide 1, fixed income, controlled risk sector is what I deal in a great deal, and that would be our hogs, our turkeys, and our chicken sector. North Carolina is blessed with plentiful opportunities to be in that sector, and we've got a lot of people who are in 3 different categories as I divide them out. What's going on at their kitchen table? What are the conversations that we're having with them? And I break it into 3 areas. Our existing growers, we've got a lot of them who have been growing for a long time. Facilities are paid for. They're faced with either upgrading them to stay in business, or maybe they want to sell them. Times like this make it extremely difficult to liquidate those facilities to a new grower or even an existing grower who's looking new facilities to expand their operation and curb labor costs and spread expenses. When you're trying to retire and sell those facilities, high interest rates and inflation and increased expenses are really tough. And so there's a lot of stuff going on out there, creative lease opportunities. Attorneys are really working with folks and crafting things like that. It's a lot of conversation. Our new growers, I categorize that as anybody who's been growing about 5 years or less. They're highly leveraged. They've put everything they got into this and they've built it, or either they've used it as a diversification tool. But that leverage is hopefully on a fixed interest rate, and they're able to weather some of these storms where they're seeing increased expenses in other areas. And then we've got the folks who are wanting to build and construct facilities. They want to diversify their income stream, or maybe they're looking to be a farmer and they're a first-time farmer. We see a lot of influx in that in North Carolina. Those are cost prohibitive right now without help, which catches me down to the next line there. What are integrators talking about at their boardroom table? Well, they're having to give cost of living raises. They're trying to review contracts that maybe hadn't been looked at for quite a while and bring it up to snuff. Construction incentives is something we're seeing commonplace. You just cannot go out on the free market right now and quote a building and pay for it in 15 or 20 years without some kind of incentive coming from the integrators, and they recognize that. Comes in the form of placement bonuses sometimes. A lot of things that we're seeing for the first time in this state, in my opinion, are grower recruitment and retention initiatives. They're needing space and they can't build it right now. So if they can't build it, they got to find it from somewhere. And so, we see a lot of competition between integrators for houses, which is something I've seen in other states, but I've not seen it in North Carolina. It had been a long time. What are the lenders doing in this question? Well, as my friend Dean Dulkey used to say, profits cure a lot of ills, but cash flow pays the banker's bills. And so in that cash flow space, it is a narrowing margin. And so we're having to do things like extended amortizations. We're having to harness government guarantees at times so we can get some of those extended amortizations and make it feasible to build. We're also having to look at some of these folks and do modifications, especially if there's a refinance involved or something that's going to increase that rate. It just narrows that profit margin down on a fixed income. I will say a subliminal message there. Please pay attention. Rush out and buy Farmers versus Foodies by your very own Ray Starling. It'll change your life. Let's hit slide 2. These folks are what I call the annual row crop market, and the variance. They've got a lot of risk. They're facing the same thing that I just mentioned for the fixed income type facilities, but they're facing uncertain commodity prices. You throw that in on top. They're already dealing with razor thin margins. Tobacco is really difficult to plan for and grow right now. And so everybody's on the hunt for replacement crops, sweet potatoes, cotton, peanuts, pickles, high value crops, as I like to call them. The hot button of today that I have conversations with every day is around risk control. How can we minimize the risk in our operation? Contract production seems to be something that is coming into rise. And a lot of our neighboring states have these facilities, and so does North Carolina, but these growers are latching on to it. And when I say that, I mean canning or freezer plants. Anybody that can get a contract for a certain amount and agreed upon price, and they can book their profit in from day one. You think about sweet potatoes, that's a money return cycle of about 18 months. And so I see a lot of folks saying, hey, how can I harness my money within a growing season, 3 or 4 months max? So, real estate purchase with those folks are down, but they're certainly not stopped. As we all know, once in a lifetime ownership comes once in a lifetime. Folks still want to buy that farm next door, so we're having to try to figure out how to make that work. Surprisingly, I think most everybody would be equipment sales. New and used equipment's in short supply. We're setting sales records. Just look at John Deere AGCO projections for stock. Their multi-use discount programs are at lifetime records. A lot of folks are doing just-in-time delivery. I mean, literally counting the hours and the days before they get the harvester there, the combine, or the tractor, or the planter to get stuff done because there's backlogs and delays. Why? They need it. It's not the right time to buy it. It's not a good deal, as our mindset was telling us. And they're not getting what they want typically, but you got to have it. You got to have it. Where does that leave the banker in all this? White knuckles is what I like to call it. We're hanging on with everybody else. And I think this is the time with all 3 of the folks on this phone in their organizations. I think they're committed to agriculture, but this is the time where you need to be doing business with one of these folks on the call in their organizations, because you find out who's committed to agriculture and who remembers the good years to help you get through the bad years. Let's hit slide 3. I promise I'm speeding up, Ray. I know you're looking at the clock. Permanent plantings in the state have changed a lot over the years. We've always had blueberries down in the fine town of Ivanhoe, North Carolina, and around Pender and Simpson County, but we're starting to see a lot of blackberries pop up, a lot of muscadine grape vineyards, folks diversifying. I know we've got a lot of stuff up in Chad's region in Carolina Farm Credit up there with vineyards and things. We've got a lot of pecans down here in different places. And I'm leaving a lot of stuff out, but what are we seeing in that space, and what kind of conversations are we having? Well, mechanical harvest. How can we harvest it cheaper? Because our labor cost is up, our packaging cost is up, our shipping cost is up. How can we value add what we've got? How can we extract that profit from the commodity we have and make it work? Market development channels that are all-time high, and diversification of income streams. Got a lot of blueberry growers who are building chicken houses. Got a lot of folks who are row crop farmers who are putting in blackberries. You name it. Diversification is the name of the day. What's the lender doing? Listening, learning, and lending. 21 years I've been going to the fruit and vegetable show in Savannah, Georgia. I've never seen as many bankers and lenders as I saw this year there. And what were they doing? They were in educational classes, learning about commodities that their folks are asking about. And how can they diversify? What does it look like? Let's hit slide 4 real quick. As we can see, the only thing higher here than farm debt and farm expenses is the sales of Farmers versus Foodies. But if we look down real quick, these 2 farm expenses and farm debt, the convergence of those two, just in the sheer, looking at the overall amount of it, causes a lot of concern. What does it mean for everybody? It's plowing new ground, figuring it out as you go, even for some of the experienced folks. Cash remains king. Folks who are well positioned to capitalize are in a good spot. Debt levels will narrow the playing field for sure. Slide 5. Look at this. This is from November of 22. My goodness. I mean, to use my good buddy Jerome Powell's quote, if you listen with farmer's ears on it, you'll certainly walk away scratching your head. We may cause a recession, and it may be light or deep, but we plan to continue raising rates until 2% inflation is imminent. I mean, just to look at the impact it's had on the treasuries and on short-term and long-term lending, it really does show some of the challenges that we're facing in all these categories. Slide 6 is a gold mine. I hope you take time and look at it. I'm out of time. I'm going to have to pass the torch back. Hopefully we can get to it. But I mean, the things that stand out on that are the time periods, and look where we're at. Thanks, Ray. Back to you.
Allison, what a chocked full set of data there, and again, insights, big picture. I really like the way you broke down the ag markets as our fixed income, our annual crop markets that are varied, and then that permanent planting stuff. It just reminds me we've got such a diverse ag community set up in the state, such a long list of commodities that farmers choose from. I would imagine that the typical ag lender in North Carolina has a little more exciting portfolio than ag lenders in some other states, which might deem themselves even bigger ag states than us. So proud of that from our state, and appreciate the insights. And I do hope we revisit one of those charts, Nelson. You can't help but look at that line graph of the debt versus the expenses, and it does actually look like the early 80s. So I need you to lower my blood pressure on that when we get to Q&A. But before we get there, also a pleasure to introduce Mark Bradley. As you've heard Nelson's joke, he's certainly been in the industry a long time. Started with Tar Heel Farm Credit back in I think worked there starting in the late 80s up till 1999 when he came over to First Citizens Bank as an agribusiness development officer. Then he became manager of agribusiness for the bank in 2014 and continues to serve in that role. Perhaps most importantly, he grew up on a farm in eastern North Carolina, Edgecombe County, tobacco, peanut, cotton, and grain. So it's not a bad way to grow up. Went to NC State and got an ag business management degree. Certainly an active Wolfpacker and supporter of programs there, but also on several different commodity boards and organizations. And so, Mark, look forward to hearing your insights and what you have to say about this situation and state that we happen to be in at the moment.
Thank you, Ray. And I'm glad to be here to be part of the North Carolina Chamber of Ag Allies conversation. You just stole my bio, so I'll move on through that. I will tell you, working on my dad's farm in Edgecombe County between Tarboro and the Rocky Mount, you learn countless lifelong lessons working on a family farm. No doubt about that. When you're in a tobacco field all day, you learn a lot about other people, but you also learn a lot about yourself. And that goes without saying. I have been here a long time. Nelson, I'd like to pick on him about it, but he was right. I've been doing this for a while. And before I made my first farm loan, I had a head full of dark hair. And as y'all can see, it's taking a toll on me. But before we get into the presentation, I am pleased today to have Paula Woodall, who works in the agribusiness department. She also grew up on a farm, and she is with us in Smithfield today. So Paula, if you'll take just a few minutes to talk about yourself, not a few minutes, I don't think we have that much time, but introduce yourself, Paula. Thank you.
I'm Paula Woodall. I have been with the bank 20 years. I got 36 years experience between Farm Credit and First Citizens Bank. I'm Senior Agribusiness Development Officer for the bank. I cover wherever I'm sent, state of North Carolina, South Carolina, Virginia, Georgia, wherever they need me. And also do the environmental reviews for all livestock to make sure we have what we need to be prudent in our decisions. And I'll throw it back to you, Mark.
Thank you, Paula. If you'll hit the next slide for me. Thank you. This is why we're here, everybody. Agriculture is by far the largest industry in North Carolina. It has an economic impact in North Carolina of $92.7 billion. And y'all can see the crops and the livestock we have here. We employ over 750,000 people. Agribusiness is important to the financial industry of North Carolina, and it is very important to the people here, Chad and Farm Credit, Nelson and his bank, but it's the utmost importance to First Citizens Bank. And mentioning First Citizens Bank, if you'll go ahead and slide due to the next slide, we'll go from there. And speaking of First Citizens, I'm not going to spend a lot of time on our bank. Just to tell you, agriculture is important to us. We are by assets one of the top 20 U.S. banks. Our asset size is $109 billion. We have 550 branches in 22 states. We were established in Smithfield in 1898. And I'm proud to say, and I know Paula is too, some of the first loans we made in 1898 were to tobacco farmers in Johnston County. We're headquartered right here in Raleigh. I work in the headquarter building, and I can tell you all decisions are made locally right here in the Triangle. And we are the largest family-controlled bank in the United States. So there's some things we're proud of. I'm proud to be part of First Citizens, and I know that that Paula is. Okay, Ray, I promise that's all I'll say about the bank right there. If we'll slide to slide number 4. Just a little bit and about the farmers that we deal with in the agribusiness department. And as you can see, we segment them and segment these into around 4 categories. Your row crop farmers, self-explanatory, and then we have specialty farmers, your produce, your fruit, Christmas tree sod, that would be your blueberries and things like that. Also livestock farmers, cattle, chickens, whether that be eggs or broilers or pullets or what have you, with every integrator around we deal with. We do turkeys and also pigs. And then we have also agribusinesses that we deal with in our department, and that would be your fertilizer, seed, chemical dealers, cotton gins, timber, lumber mills, and your vegetable packing. That would be your blueberries, your sweet potatoes, your cucumbers, and things like that. So we have a wide umbrella in our agribusiness unit, and these are the types of farmers that we deal with. So if you will move it to the next slide. And the first loan that we do, and if you talk to me, anybody that knows me, and I'm sure Chad and I know Paula is, and Nelson, right now is when we are busy renewing lines of credit for farmers. When they're not busy in the fields, we're busy in our office getting these lines renewed, and that encompasses getting tax returns, getting profit and loss statements, and updating their balance sheets. Hit the next animation, please. Okay, and we also finance farm equipment, and that can either be a loan or a lease. It can also be either new equipment or used equipment. Farm real estate, do a lot of that. We put a lot of this stuff on annual payments because farmers get paid once a year. They don't get paid monthly like the rest of us. They get paid once a year. So we have annual payments and do quite a bit of that. We can spend some time on farm real estate, the values and all that. One more animation here, I think. And we just mentioned poultry and swine houses. We'll do construction on these houses. Ever how long it takes to get constructed, maybe 6, 8, 9, even up to 12 months, and then term those loans out. And we get assignments through the integrators to get our money back. So they're the types of loans that we do, and keeps us busy. Paula can attest to that. The next slide, I think, is why we're here. This is why Ray called us all to join this. As you can see, this picture was taken in late May of 2022. And in late May, they're laying this tobacco by. And at the time, I did some calling around with the help of Paula and other people in our group. And just look at these inflationary pressures on our farmers. Let's start off with tires. They were up 31%. As Nelson just said, if you could find a tractor, it's going to cost you 27% more. Ray, diesel fuel at the time was up 62%. Every year, our labor goes up. H2A labor was up 8% in 2022, going to be even higher in 2023. Your chemicals, depending on what chemicals you were, this is kind of an average, 30%. Fertilizer, got to have it. This may be a little high, but there were some fertilizers that had nitrogen in it that were up 98%. Just hang on to that picture and just think about it for a minute. I also want to talk, it's not on this screen, Nelson just mentioned it, interest rates. Interest rates are, as you know, going up. The prime rate in March of last year was 3.5%. Currently is 7.5%. That is a big jump in a small amount of time. Getting away from row crop farmers, Ray, these rising construction costs are impacting mostly poultry construction of new chicken houses. These integrators need new houses. Older houses are not as efficient. They need new houses, and they are offering incentives to new growers to put these up. But with your row crop farmers, with your poultry farmers, with your swine farmers, the input cost here on this screen has to correct itself at some point. Sure, prices for farm products are higher. Corn prices, soybean prices. Cotton went crazy early last year. It's come back down a little bit. But how long will these high crop prices hang on? They've got to be higher to compete with some of these costs. It has to correct itself, Ray. This is not sustainable. Can't get into all of our credit numbers and how we look at loans, but to keep it simple, our credit culture at First Citizens, it doesn't change much. We're consistent, and our consistency guides us through good economic times and hopefully difficult times. And I think that we have farmers that are dealing with us right now that have the ability to make it through below average years, below average times like we're in now. We can work with these guys and refinance them if they have losses, and get them back on their feet. That's what we're hoping. So I think this slide kind of summarizes why we're here, Ray. Hopefully we'll have a little relief next year, but I can't promise that. I think we'll have some more rate hikes and to curb this inflation. But it's hurting everybody. It's hurting the farmer. It's hurting the consumer. Everybody's feeling this. Before we move to the next slide, I had the pleasure, and I hope everybody on this call had the pleasure. When I was working at Farm Credit, there was a guy named Bill Jones who worked with me. He was older than me, and he retired, and unfortunately, Bill passed away shortly after retirement. Bill was my mentor. He gave me a common sense way of looking at farm lending. All the ratios and stuff have value and they mean a lot, but he took a common sense approach to lending money. And we cannot forget the common sense approach right now when we're facing these challenges. Bill told me that, Mark, you're not in the lending business, you're in the people business. And we got to keep that in mind. We just happen to deal with people's money. So if you'll hit the next slide, we'll go through these. And I call these as my respect to Bill Jones. Let's not do them all at once if you can. Let's back up that. Thank you. Bill told me you need to figure out why a customer needs a loan. And that sounds simple. But when Bill was a younger man, he said one prospect answered, well, the first thing I plan to do with my loan is to get my lights turned back on. So that's important to know why they need the money. Let's hit the next animation. Learned this a long time ago. Know the difference between a prospect and a suspect. That sounds simple, but sometimes it is not. Let's go to number 3. is make sure the loan payments come due the same time as his paycheck. Number 4. Also a good idea to make sure the payments are less than his paycheck. Very important. That's called cash flow. Number 5. This is from our good friend Jerome Vick. I can't give Bill credit for this one. Very true. If you can't work it out with a pencil and a piece of paper under a shade tree, you can't work it out behind a mule in 95-degree heat. Just won't work that way. It's got to work on paper. Number 6. And I don't know where I got this one from, but it's very true. Timing has a lot to do with the outcome of a rain dance. Number 7. Speaking of rain, it's a good idea to buy your irrigation system on a rainy day. And that's another Jerome Vickism. Next one, please. And Nelson, I didn't know you want to steal my thunder, but you did. I went to Dean Delkey as well. But profits cure a lot of ills, but cash flow certainly pays the bills. And then before we go to number 9, Paula and Ray, not Ray, I'm sorry, Paula and Chad and Nelson, we all compete and we all try to find the farmers with the highest net worth. They're the ones that are going to be the low-hanging fruit that we can make loans to with your eyes closed. So if you'll hit number 9, net worth does matter when you lend money, but let's not forget that net worth doesn't equate to self-worth. So if we'll go to the next slide, at my ending here, I just want to thank you again, Ray, for including Paula and myself and First Citizens to this event, to this webinar. I love doing this, telling the First Citizen story, but also talk about the farmers and some of the challenges we're facing now. But overall, I feel very optimistic about agriculture in North Carolina, and for one reason and one reason only. It's our farmers. Our farmers can withstand this. Our farmers are the best farmers in the United States. And if we're the best farmers in the United States, then we're the best farmers in the world. And we feed a lot of mouths in the world. Don't forget, one farmer feeds 164 people. So don't thank your banker, thank your farmer. And I'll end on that note.
Thanks, Mark. That's great. Both the technical insights and the what I'm going to call Markisms. They're yours now since you put them on the slide. And Paula, always great to see you. Thanks for being with us and for being a partner in what we do here. Chad, I want to come to you quickly, and you knew this joke was coming. I mean, Chad is he's a rose among the thorns, I guess we can say, because what makes Chad unique, in one way at least, is he's a UNC Chapel Hill graduate. And so I told him a couple of days or maybe a week ago, I was going to give him a hard time about that. And he said, it'll be the first time in an agriculture setting that anyone's given me a hard time about being a UNC grad. So I think he's pretty thick skinned and used to that, but been with Farm Credit for a long, long time. He is the chief lending officer there. And really oversees lending for 29 branch offices in 54 different counties, 26 years with Farm Credit, after graduating with a BS in Business Administration from UNC Chapel Hill. Just let me read through the list of roles that he's had, starting with Carolina Farm Credit as a roving loan officer in the Sandhills region of the state. So he was a loan officer, then a branch manager, then a credit administrator, then a corporate lender, a regional manager, the chief credit officer, and now the chief lending officer since 2015. Also gives generously of his time to North Carolina A&T on the advisory board there. He and his wife live in Mooresville. Chad, really grateful for the Farm Credit structure and system and presence in the state, and really grateful that you'd spend some time with us this morning. So what are you seeing? How's it going out there, and what keeps you up at night?
Good morning, Ray. Good morning, everybody. Thank you for that kind introduction. The razzing is something that I am accustomed to. So being a UNC guy in the ag space is interesting every day. I grew up in Lee County, just out of the shadow of Raleigh, so familiar with the central part of the state. Now live in the Mooresville area. Nelson and Mark did a great job. You will hear some commonality in the feedback that I have, but maybe a few things different as well. I will start off by saying that I just concur with everything Mark said there at the end around the quality and the breadth of our farming community and our farmers. They are the biggest asset that this industry has in our state. So everything we can do to support them, we need to do that. And Ray, I appreciate the chamber being involved in this space. That's so important. So I want to talk a little bit about what we see from our seats in terms of agriculture, the current state in North Carolina, some headwinds, some tailwinds, and then a few things unique to lending in this space. So if we'll go to the first slide, we'll start with the idea of interest rates. So you've certainly heard that talked about with both Nelson and Mark. So this is a chart of the federal funds rate as it has moved since February. So sometimes a picture is worth 1,000 words. Pretty clear there that there's been a dramatic move in short-term interest rates and eventually long-term interest rates during that time. So how does that actually apply to our farmers? Just one example, Mark mentioned the prime rate. Oftentimes short-term operating loans are based on something with the prime rate. They're based on some type of variable rate. So that prime rate has gone up over 4%. Actually 4.25% over this period of time. So just one example, $1 million loan that a farmer might take out for their annual operating expenses. That $1 million loan is costing them $42,500 more in interest today than it would have 1 year ago. So that's certainly cutting into that cash flow, and $1 million operating loan is very small for some of our larger farmers in the state. So interest rates are certainly cutting into their cash flow. Moving on to the next slide, you heard them both talk about inflation. This is an idea of the inflation rate over the course of last year, peaking there in the summer and then starting to tail off towards the end of the year. But again, that inflation for most of us that are not full-time farmers may be the eggs at the grocery store or certainly at the gas pump. But inflation for the full-time farmer are dramatic increases in those expenses that Mark's already talked about in terms of fertilizer and chemicals and the other things that are needed to produce on the farm. So certainly that is cutting into, again, the farmer's cash flow and their profits. Hopefully that trend will continue to cycle down some as we move forward. As Mark mentioned, we are in operating renewal seasons, so we are renewing our operating lines for our farmers. What we've been able to tell so far is about a 10 to 15% increase in the loan amount that they're asking for. So we'll say that is reflective of some of these increased prices. But again, hopefully 23 is a little less dramatic than 22. If we'll move to the next slide, also talk about just the overall economy, GDP, for just a moment. So we all have felt this. Certainly you see there, second quarter of 2020, that's COVID and the big drop in GDP, and then the rebound in the next quarter, thankfully, and some moderate growth. And then in 2022, as the rate environment started to ramp forward, you see some pullback in the GDP. So certainly that is reflected in certain things. Nelson mentioned equipment sales being very, very tight. That's certainly one area that we have seen a pull back just because the supply of equipment has not been readily available. So when we talk about headwinds, interest rates, certainly inflation, Next slide, we're going to talk about crop prices, and there's kind of a yin and yang here. So in terms of our livestock farmers, if we can move to the next slide real quick. In terms of our livestock farmers, their headwinds have to do with feed costs. You can see there, this is a snapshot based on last week's market of corn, soybeans, cattle, etc., and then how those prices compare to last year this time. So certainly if you're a livestock farmer, a cattle or dairy farmer, you're feeling the impacts of feed costs in this current market. So that's certainly a headwind for you. Talked about labor a little bit earlier. Labor is certainly a challenge for the farming community. It's a very tight labor market, which makes it difficult to find and keep labor at times, as well as some of the political environment around immigration gives uncertainty to what the labor markets may look like going forward. So labor is another headwind that we see with the farmers. So I would say overall, the last thing I would mention there would be the Farm Bill, which expires in September of this year. And that is going to lend to some uncertainty as some of the price supports that the farmers get. So I guess if you're looking bad news, good news, all that I just talked about are kind of the bad news or the challenges. Then I want to talk a little bit about the tailwinds, or what's really in our favor with the farmers. And certainly the price of commodities has held strong. And as you see from this chart, the price of corn is up. That's about 80 cents over the year over year. Price of soybeans is up over $1. Cattle prices are holding and actually increasing. Dairy's down some, but still based on historical, those prices are pretty strong. So certainly the commodity markets have held. What we are hearing this year is that the corn supply looks like it's going to come in a little bit less than initially thought. So the price should hold in terms of tailwinds. The poultry supply is stable, as was mentioned earlier. The other thing I would mention is that real estate values have held really well. And that does add to the net worth that Mark talked about. It doesn't create cash flow, so farmers still have to figure out how to make those crops profitable. But there are some good things in terms of the commodity prices. In terms of balance sheets, they appear to be pretty strong right now. North Carolina, we have a good environment for agriculture in terms of regulation and political environment right now, so that is also favorable. So overall, Nelson mentioned white knuckle. I don't know that we're quite white knuckle at Farm Credit, but we are cautious. One thing I will say about the Farm Credit system, not as an advertisement, just as a matter of fact, is that we are here for the farmers in good times and bad. So we are watching what's happening, and we are making sure our credit policies can flex as needed to help the farmers with what they need during this time where they do have some of those challenges. Last thing I want to mention is just a little bit about the uniqueness of our lending environment. We've talked about cash flow. We've talked about how that is being impacted right now. I want to talk just a second about technology. So as with the rest of the world, technology is certainly transforming agriculture. Farmers are becoming more technologically savvy. They have more tools at their discretion than they ever have before. In terms of lending, Farm Credit's been around for over 100 years. So we know how to lend money, but do we know how to lend money in the new environment of technology and where speed is a competitive factor? And so we are working really hard to upgrade and evaluate our technology systems so that we can deliver to the farmer quicker, faster, with less red tape, because that is where the industry is going. And I think, for everyone on this call, on the panel, we have to look at technology and how we deliver credit quickly and efficiently. So we're certainly looking into that, investing in that space, significant amount of dollars so that we can be modernized and be ready to move forward. And the last thing I'll just mention, again, just to circle back, it's been so good to be on the panel here today and to hear the other speakers and to know that the relationship aspect of what we do as ag lenders is not lost. At Farm Credit, we kind of joke sometimes about this notion of good man, good plan. Well, now it's not good man. Obviously, it's good man, good woman, good producer. But you got to look at the relationship. And if you're going to be in agriculture, you got to be steady in the challenging times. And we believe that we're positioned to do that. And frankly, I believe everybody on the call is positioned to do that, which is very encouraging for the state of agriculture. And again, our farmers are our greatest asset. And so just again, kudos for everyone for investing the time to invest in our farmers' future and learn how we can better help them.
Chad, very nice job. Thank you for that insight and overview there, and particularly for the comments at the end. I think almost everybody in this industry doesn't really view it as just a job. It's a bit of a mission, and it's being part of a bigger food system that gives us the safest, most affordable food supply in the world, frankly. So good stuff. Thank you. I'm going to invite all three of our panelists to turn their cameras back on, Paula as well, if she'd like to. We will take your questions in the chat box. I'm happy to relay them. You can also kind of raise your hand, and I'm happy to recognize you. I think in this particular setting, ordinarily your camera cannot be turned on, but maybe we trust this ag crowd a little bit more than some others. And so I want to start though. First of all, I'm going to steal Nelson's slide on expenses, that orange line that was across the bottom of the screen. And Mark, I'm definitely stealing that slide on input cost with that farmer, that tractor rather, out in the field with those percentages. The question would be then, with that sort of input cost inflation, is there a lid there? I mean, and is it variable? I mean, I'm assuming it has to be variable based on, well, or what happens with commodity prices, but what's the canary in the coal mine if we're concerned about that amount getting too high? I mean, the idea that these things are just going to keep going up in price, but at a lower rate of price growth is not all that comforting. And no one's talking about deflation. And so when does it get to be too much? I mean, when does it actually start to be a problem? All three of you are pretty optimistic. No one's saying we're not going to get there this year or next year, but when does that tip? What do we look for?
Ray, I'll take a stab at your question, and that's a good observation. Obviously, that picture was taken in May, and the tobacco looked really good in May. That same field, it didn't rain much in June. It got very hot in June, and everybody was worried about the crops. But then they turned around in July and August, and we made a average crop. Some fields were above average. But the only way to beat this inflation that we're talking about with crop input cost, you've got to beat it with yield, and you've got to beat it with price. And in many instances last year, we were able to do that. Now, if we have a hurricane season next year, we're going to have some problems. And this, like I said earlier, these input costs are not sustainable for the ag industry.
Good, Mark. Yield, price, anybody want to add to that?
I would just say that the Farm Bill is critically important, the next version of the Farm Bill, and how it fills in some of the gaps that are being eroded by this inflation. So we're all watching that very closely to see how Congress responds to the needs.
Chad, do you think that concern and that watching is more on the sort of the Title I, the commodity support price structure, or is it more around things like crop insurance elsewhere in the farm bill? Which of those to you is more critical to watch?
I don't know that I can say one's more critical than the other. I mean, obviously, without crop insurance, that's a non-starter for some producers, and catastrophic, not to have it and take a big loss. Certainly the price supports are what we're looking at in terms of cash flow and how much inflation can be withstood.
Yeah. That's good. It draws me to another question. And Nelson, unless you want to jump in on that first one, I mean, when does it become sort of pencils down in terms of rising input cost? If you want to react to that, fine, we can move on. It's up to you.
Well, no, I mean, I have alignment with Mark and Chad and Paula, I know alike. But, you know, there's some smart people in agriculture. There's some smart people in North Carolina agriculture. And I see so much innovation coming out of these narrowing margins. When is enough enough? I don't know. I don't have that answer. I don't even have enough time to read the articles I read on it from the economic standpoint of what the impact's going to be. But what I do know is if we look at seasonality, if we look at weather impacts, if we look at the political impacts, we weather all those things. We will weather this inflationary market in these interest rate models, and some people will come out on top in winners, and some people will lose. And you know, as my dad always said, there's three things: it's going to get a little bit better, it's going to get a little bit worse, it's going to stay the same.
I hear you. Well, we'll
All
take
right,
that. Go ahead.
Let me add more, you know, efficiency is the name of the game, but these farmers can't tighten their belt but so much. Believe you me, and I think everybody on this panel will agree, that last year when they started writing the checks for chemicals and seeds and everything else, they realized it was belt tightening time. So you can't tighten them but so much, but efficiency is going to be key also.
Good. I've got a couple more. No one else has chimed in. So, you know me, I'm not going to let class out early. But these can be quicker and maybe just sort of lightning round for these last two, and then we'll let folks get to their lunch. But one is, you know, we think a little bit, I don't think we think a lot, but we think a little bit about all the bigger pressure on ag outside of the farm, and I mean really big. I mean geopolitical movements, the situation in Ukraine, the environmental policies adopted in the EU, China's strategy toward trade. A lot of what we've talked about this morning is maybe a little closer to home than that. If you had to pick one thing, big picture, outside of an individual or farmer's control that we all need to keep our eye on, something you see changing, something you see threatening, something you see as an opportunity, you know, what would that be? Is there something bigger out there that we're going to end up dealing with in the next 10 or 15 years that's going to change our views of ag credit and credit opportunities?
Right. I think North Carolina has so many positives. People are moving here from all over. And Raleigh and Charlotte, places like that are expensive to live. So they're moving to the country. And that is causing some problems. You're seeing farmland now turned into developments. That the loss of farmland is real. You can't ignore that. But then when they build a house by a farm, whether it be a row crop farm or a chicken farm or a hog farm, they don't think it's very pleasant when they're out there spraying cotton defoliant at 6 o'clock at night. So I think we've got some outside factors like that that are bothersome.
That's great. That's good.
So I'm not. I know we don't have a lot of time, so I'll just be quiet and let the others chime
Yeah.
in.
Any response to that question, Chad or Nelson?
Yeah, I would tack on to that. I think that's a very insightful look at it. I think we have to find a way to find some balance and some harmony between the ag community and the urban community that wants to live in the country. And that's going to be political. That's going to be regulation. Are we able to find that balance where you know, everyone can live in a state of harmony? Because that's not going to stop. I mean, North Carolina is a very, very attractive place to live. I live in Mooresville, North Carolina. You know, probably if I see 10 people, 8 of them are from out of state in this particular city. You know, so you go to the eastern part of Iredell County over into Rowan County, and all of a sudden you've got a land at $15,000 an acre is very common. So how do all those parties live in harmony, I think, is maybe the biggest challenge North Carolina is going to face.
Nelson, round us out.
Well, I'll jump in on that, and I don't want to beat a dead horse, but I got a bat. There's a horse. So, you know, the thing that I see that both of these guys have said is absolutely the truth. The one observation I think we're seeing that we hadn't talked about is a number of people we finance that are not from North Carolina. There is such an influx of agriculture across this nation to politically friendly states or business growth friendly states. And we see it in South Carolina, North Carolina, and Virginia. These folks are moving from Texas and California and the Midwest and places, and they're coming here and they're setting up shop. By that same token, when I go speak to young people in colleges across the state and nation, I see unwillingness to change. We need to be on the family farm. We're going to plant a flag and stand by it. That no longer stands today. We have to look at where we're at and what we're doing and where it's near and what it's worth and make a decision. Do we carry on the family legacy and move it somewhere else in this great nation or this great state? And I think that's one of the things we're going to face as we move forward is we've got the optimism. Do we have the willingness to change and adapt? That's my thoughts on it.
Nelson is right. They're coming in and farm prices at $15,000 an acre. I don't care what crop you grow. You cannot buy that farm and pay for it as a farmer. You just can't.
Great words, great thoughts, great insights. You've been generous with your time. You've been generous with your information. I think everybody on the call listening in knows this doesn't just happen, right? We have to get together. We've got to put slides together. So thanks to our panelists for agreeing to do this and invest some time. Thanks to the chamber staff that helped pull this off. In particular, Natasha and Linka, thank you for your help. We've got a couple of just comments to make here at the end. Just would flag for you that we're doing a government affairs reception downtown about a month from now. It's always a great event, well attended, great opportunity if you're not always in the government affairs world to come to this one event and rub a lot of elbows in one evening. And it's also pretty good eating, if I may so myself. And then our annual meeting where we recognize some real stalwarts of the business community in the public sector at our annual meeting and cover a little bit of business there. That's in March. It'll be downtown at the convention center. And so certainly registration for that still available. I would also throw out, we have an environmental conference, I believe, next week ag's got to pay attention to that issue. And we can't outsource that to other folks. And so watch your inboxes for more information about the NC Chamber's annual environmental conference. And really just thanks for being with us. Great conversation. We'll do this again in a couple of months. Mark your calendars. First week of October is our annual Ag Allies meeting out at the McKimmon Center. Already have that program pretty much planned. You're going to love the lineup of speakers there. I'll tease you a little bit. But plug in here with us, not just in these formal ways, but please feel free to be in touch. Nelson, Mark, Chad, very grateful for your time and your insight, and also for what you do for our industry across the state. Also grateful to the institutions that employ you and appreciate that they're all good citizens and that they're involved in their statewide chamber. It's meaningful, it matters, and we've got to have these horizontal partnerships if we're going to keep making North Carolina not only the best place to live and work, but the best place to farm. So stay in touch, everybody. Take good care, and we'll see you next time.
Thank you, Ray.
Thank you, Ray.